There's an interesting thing going on, right? We've covered the fact that Michael Burry, the famous hedge fund manager, is short treasuries. Now we know he's short by $250 million. So his position, he was also short, by the way, Bitcoin. So his positions aren't looking all that great right now because look at this. Bond bubble keeps inflating. Value of global bonds has hit fresh all-time high at $69 trillion despite rising inflation.
Yeah, we've been doing this show for 13 years, and almost for that entire time, we've been talking about various money managers shorting the bond market. And for 13 years, that's been a losing trade. Michael Burry joins 20 or so other money managers we've covered over the many years who've decided to stick their necks out and say, hey, the bonds are topping out. We're going to go short bonds. So it looks like he's losing money on that trade, just like everyone before him. And he also went short Bitcoin, and he's taking a colossal loss on that right now as well. So the thing about money managers, if you watch our show for years and years, you know that 1 year does not make for a track record of any duration or magnitude. Anybody can have a hot hand for a year or maybe two, but very, very few can extend it out 5 or 6 years. That's why almost no money manager or hedge fund has ever beaten the Dow Jones or the S&P 500 consistently, pretty much ever.
That brings up an interesting point, because I'll say that just buy an index fund. You track the S&P 500 or the Dow, and you'll outperform all the private equity and hedge funds, and you don't need to pay them 2 and 20. You don't need to pay them 2% of their assets under management every year, or 20% of your profits. And that brings me to this interesting data point here, in that as of this past week or two, the U.S. has this new mandate whereby hospitals have to provide transparency about how much things cost at their hospital. And look at this data for cash, somebody who's paying cash, and it's the blue dots in this chart I'm going to give you. Paying cash, i.e. individual Joe Bag of Donuts, the ordinary schlub, versus the red dots, which are the biggest major insurers and what they pay. And it's pretty much equal. You're paying those insurers $1,000, $2,000 a month to negotiate on your behalf. Well, you're doing a better job. Ordinary Joe Bag of Donuts with cash is doing a better job than some of the major insurers. So the new hospital price transparency rule just hit. The prices they charge clearly have no relation to anything. More dysfunctional than any central planner. So this is the prices for a knee MRI. The red dots are the major insurers, as I said. The little gray dots are other insurers, and the blue dot is the cash price. So Baptist Memorial and Memphis is the first one. And you see the blue dot, they're down there with most of the major insurers, but there are major insurers up over that halfway point. That's it. People paying 10x what the Medicare reimbursement price is. Beaumont Hospital, Royal Oak, Michigan, as you see, cash is outperforming a lot of the major insurers, and only in Mass General and Boston are they up there paying with the major insurers as well, 10x what Medicare, the government, reimburses these hospitals for that same knee or MRI.
Right. Well, again, we've been talking about this for a number of years. The medical insurance industry, the Obamacare program, is a complete scam. And that does not include the so-called deductible. So when you add the deductible into the mix, what you find is that you pay cash anyway for the procedures, right? Because you have like an $8,000 or $9,000 deductible, you're paying $20,000 a year in medical insurance. If you need to go to the hospital, you have to pay the $8,000 or $9,000 for the procedure. So what's the $20,000 for? It's a complete extortionary layer imposed by corporations to extract wealth from the many. That's government sanctioned. So it's a government sanctioned extortion racket with no benefits whatsoever.
Yeah, at least like in New York and New Jersey, when they used to have the mob, they'd come and shake you down once a month, just like these Obamacare insurance policies, right? They'd shake you down once a month. You have to hand over the money. At least they provide a service, right? They used to provide a service, and they wouldn't break your legs, and you wouldn't need an MRI. But also they would, provide the trash collection, make sure nobody robbed your store or anything like that. Here, you literally get nothing back. You're better off just paying cash, or it costs the same anyway.
Well, yeah, as we pointed out, living in France, for example, we used to go right to the American hospital to get medical treatments, pay cash, and it was, 1/10 or less of what you would pay in the U.S. And this is at a world-class hospital like the American Hospital in Paris. And it's if you look at pricing around the world, you can tell that in the U.S. they have an interesting situation that falls under the heading of healthcare. It's just like banks are constantly getting bailed out with free money, the hospitals are constantly getting essentially the right to extort. And that is, of course, highly detrimental and causes incredible problems. I have no idea why Americans have this mental gymnastics. They go out of their way to save 2 cents a gallon on gasoline. They'll drive a mile away, 5 miles away. They go to Costco and buy 80-pound bags of dog food. They go to Walmart and buy a $2 sweater. They love to get a bargain. They, in the whole industry and online with Groupon, get your Groupon together and go get a sushi lunch for half off. But when it comes to healthcare, all the money they saved and all those different discount schemes, they throw out the window and pay 5 times as much by catering to these extortionists who just, they don't actually provide any cost benefit with the insurance because of the so-called deductible. And on top of that, they charge $20,000 a year for somebody to get absolutely nothing.
It's a shoddy product. And speaking of shoddy products, inflation is also, you see that in shrinkflation as products shrink so that you don't see the sticker shock. But even with that sort of stuff, we're actually starting to see more and more inflation. And in fact, even CNBC is reporting on it. I might add a few months after we started reporting on this. But for everyday Americans, inflation is a double blow to bank accounts. The latest Consumer Price Index, which measures changes in how much Americans pay for certain goods and services, finds prices rose an average of 5.4% in July compared to a year prior, mostly driven by food and fuel costs. That's tied with June's increase as the highest inflation rate in 13 years. And they point out, importantly, Max, this is the important thing, inflation can make it easier to pay off debt and even help bump up salaries. But it also makes savings less valuable and goods and services more expensive. And currently, wage gains in the U.S. are not keeping pace with sky-high inflation.